Okay, hey everybody, today is Monday, May 4th, 2026. For those that don't know, it's Luther, real estate extraordinaire here in the Kansas City market. And before I jump into today's topic, I want to do a quick recap. I've been talking more about real estate investment operations and how operators and those real estate investors who are on the ground doing the day-to-day type stuff for the real estate investments, how they can get compensated more efficiently. And I made a point that I would eventually do a video talking about how commercial and multifamily investors operate, or at least some of them operate, right? And how we as residential investors and service providers can incorporate some of the good that the multifamily and commercial real estate investment operators utilize, and how we can incorporate that into our residential real estate investing businesses, okay? And of course, a big part of that is capital, right? Big thing that I've hammered over the last couple years, all right? So I'm gonna get into what is a limited partner, okay? I'm gonna talk about what is a general partner, okay? And then I'm gonna get into some just general concepts and ideas, again, on how you as an investor, service provider can, do more deals and be more efficient as a residential investor, okay? So a key thing here is running it like a business. That's massive. For a lot of us on the residential side of the business, a lot of times we're focused on the deal, or we're deal centric, right? Whereas a lot of the commercial players and multifamily operators are more business centric, okay? So that's a key factor that I want to distinguish, right? And I got some notes here too, so you have to bear with me. I got a little bit of help from Claude AI, okay, to help me, talk about some of the main things and stay on track, okay? A few other big things that the commercial and multifamily operators think about is they think about capital pools, they think more about investor relationships, and they also think more about recurring compensation structures, okay? So I know I alluded to it on the last couple videos, and this is massive because I spent years doing it, and I see a lot of investors do it too. Early on, our primary focus is on finding a deal or finding an opportunity that we can invest in or place capital in. And then once that happens, a lot of times we may already have somebody associated with us who wants to do business with us. And a lot of times they're the capital person, right? And you do that once, you do that a few times, and if you really want to grow and operate more efficiently, I think a lot of us realize, like, hey, we gotta not only get a better handle on the operations, but hey, we better get a better handle on the capital. And that's what so much emphasis on the commercial side is all about, all right? All right, so what is a limited partner, all right? And this is according to Claude AI. I'm sure they got sources from different, places on the internet and whatnot, and I'll kind of elaborate on it as well. So limited partner, they are a passive capital contributor, right? They have limited liability and they have limited control, right? And they usually expect a return on their capital without doing the work, okay? Let's see, in residential terms, this is the person writing the check, okay? And as I mentioned before, it could be a private lender, it could be an equity partner, or it could be a silent investor, okay? Now, what is a general partner, okay? General partner is the active operator, okay? They find the deals, they execute the strategy, they manage the assets, okay? So general partner, on the other hand, takes on personal liability and responsibility. They, as I mentioned before, are on the ground. There's a common term that investors use, and it's boots on the ground. Okay, so we're here in the Kansas City market. A lot of my clients and a few of my partners have been out-of-state investors. Okay, and the term that they've used quite a bit is boots on the ground. I, in a lot of cases, have been their boots on the ground. Where I started to make a big difference about, or a big switch rather, was about 6-7 years ago, right? I was, prior to that, I was mostly just a service provider as an agent, as a property manager, helping investors get through the renovation process, right? I had, not a whole lot of liability. I had no ownership in those investment properties, okay? But I was doing the operations, okay? As I said, handful of years ago, I started looking at capital, and I was like, hey, if I'm gonna do all this work, I wanna definitely be able to use my experience. I wanna get ownership in on these deals, okay? And that's what I started to do, all right? Okay, so before I go on to the next thing, what else is a general partner? What are some of the key concepts around what a general partnership or general partner is, okay? In residential terms, this is you, right? All right. Let's see, why residential investors rarely use this language and why it's costing them, okay? Because most residential deals are structured as a simple loan or a vague split, all right? As I mentioned before, a lot of investors, they find a deal and then they go hunting for money, and a lot of times they can find money. Accessing money, as I'll get into a little bit further into this video, accessing money isn't necessarily the hard part for a lot of people. Especially for me now, it's accessing the right kinds of capital, okay? So as investors are finding deals, they start shopping for money, and lo and behold, there's a lot of people out there who are willing to put up money on a short-term basis, okay? Some of them referred to as hard money lenders. Others might be referred to as private money lenders. You get the idea, okay? So in the commercial world, right, how do general partners get paid? Here are some of the main ways that GPs get paid, okay? Acquisition fee is one, right? That's for, finding and closing the deal. Asset management fee is another way. That's an ongoing fee for managing the investment or investment portfolio. Okay. A third way is equity splits or profit participation. Okay. The GP or general partner gets a percentage of the upside. Okay. So that means that in order to get that upside, they got to perform. There needs to be profits. Okay. A fourth way is the promote. Okay. Or the promoted interest, which I wasn't really familiar with, okay? With the promoted interest, the GP gets a disproportionate share of profits above a return threshold, okay? So this is a big one that most residential investors don't use, and really you may not necessarily need to, depending on, again, your strategy, how you structure things and how you operate, okay? And then let's see, the fifth one is the preferred return for LPs, okay? So I noticed a few years ago, as I was rubbing elbows with some multifamily players here in the KC market, going to some different meetups, I started to ask them about some of their deals, how they were operating, and how they were, sourcing, securing, and using capital. And this was a big one that came up time and time again, the preferred return for limited partners. Again, the limited partners are more of the capital people, less liability. They're not doing the work. They, a lot of times, are putting up the money and writing a check. A preferred return for limited partners, for a lot of the multifamily players that I met with, the limited partners got a certain percentage, and it's common, example was 8%, okay? And that 8% off the top, okay, goes to the limited partners before the GP or before the general partners participate in profits. Okay, so that's just one way to structure it. And I gotta give a shout out to John Burley and company. I started researching him, and I ended up going to a couple of their events about 3 years ago. And he was the very first person I had met and had heard talk about doing residential real estate investing as if you are a commercial or multifamily operator. Okay. And I went to a couple of his events in 2023, and I was blown away. I was very impressed with how not only their investment strategy, which a key part of it is seller financing, which I love and have been doing since 2009, but a huge thing that they not only talk about but broke down was how residential real estate investors can not only raise capital for their single family home investments, but also how they can structure it and get themselves compensated. So I've borrowed, bits and pieces from John Burley. I've borrowed bits and pieces from my dad, who's been doing this for 35 years. And I've kind of just learned along the way, doing my own deals and helping other investors through that process. So kudos to you guys. All right. All right. So I talked about limited partners, what they are. I talked about general partners, what they are, how general partners can get paid. Okay. And I want to wrap it up talking about how we as residential investors can, get to it and source capital in different ways. But I think a key part of that is understanding our own investment strategy, okay, and understanding our own numbers, okay. And you are gonna have to really get dialed in if especially if you're somewhat newer and you haven't done quite as many deals. You may need to kind of refer to some of your colleagues and other operators or service providers in your market. Okay, so you got to dial in and be real specific on certain markets, because the rates of return and the types of cash flow, the barrier to entry, how much you might need to get into an investment varies depending on where in the US you're investing. All right. And this is also fresh in my mind because I did a post on Instagram and social media yesterday breaking down some of the findings. Okay. So of all of the deals that I've done, all of the investors that I've helped over the last 6-7 years, I was able to, because I was tracking it. I pulled up my spreadsheet and I was like, all right, this is the average amount that we paid to acquire the investment. This is the average amount that it costs to get through the renovation process, okay? And then, of course, our strategy uses seller financing on the back end to generate more cash flow that's a little bit more passive. And I was able to see how much cash flow per month each of those investments would generate, okay? So for you, you're gonna have to kind of do a similar type of thing. And that way, when you are talking to potential backers, clients, investors, you will know how to present it to them so that, you also know if it's a good fit for you. Because one big thing that I've noticed over the last 2 years as I've been presenting these findings and sharing more of this information is that there's a lot of capital out there. There's a ton of people that want to invest in real estate. There's a lot of people that know that real estate is a good play. But the type of capital, you're right, their expectations, their terms and so forth for how that capital can be used didn't align with my investment strategy. So it's not all bad. I just realized hey, if I'm going to do a certain strategy, the partnership okay, the capital has to align with my investment strategy, right? And if I do meet a backer or potential lender or, partner who doesn't necessarily align with that, I can simply, keep them in mind for a future opportunity that comes my way that may fit with their type of capital and expectations, or I could simply refer them out because, as a broker, like, hey, I know a lot of investors that want to do fix and flip. There's a lot of investors that don't mind using short-term funding, right? And I can connect those particular backers or private money lenders with investors who are willing to use that type of capital. And of course, I get a referral fee or commission for that. Okay, so the willingness to walk away is a big one, y'all, as you're talking to investors out there. Understanding your strategy, getting yourselves compensated on the front end somehow, or if not on the front end, along the way, because you guys and gals are doing a lot of work out here, finding amazing opportunities, getting them closed, funded, and so forth, getting through renovation projects, getting through refis if you're going to keep the thing, and then if you're going to fix and flip reselling. It's a lot of work. So, as you're growing your enterprises, talking to different capital players, hopefully this will help you out. All right, so thanks for tuning in. Peace, y'all.